Good morning, everyone. I'm Karine Coutinho. I'm VP Marketing and Communication at Lemonway, and I'm really glad to have you online today for this new Lemon Boost with EPSA and MasterCard, who kindly accepted our invitation to address a very burning topic today, that is the one of B2B payment transactions in a digital world. In fact, what we see at the moment at Lemonway is that the use of online marketplaces, as you know, which put multiple sellers in contact with multiple buyers, is currently becoming a consumer reflex, and it's actually shaking up many markets. And the B2B market is currently no exception to this trend, and more players in various sectors are really looking to adopt this model as a real transformation tool for their processes. And inherent to this rise of B2B marketplaces, the B2B payment ecosystem is currently following a deep digital transformation, optimizing, automating, bringing more efficiency and speed in B2B financial flows is today the promise that is brought by the latest B2B payment innovations. And this is what we are going to explore together today. So to do so, we've prepared for you a very comprehensive program. So we'll kick off this program with a panorama raised by Yvan Wallert from EPSA. And Yvan is going to address the acceleration of this B2B marketplace model, and is going to explain and deep dive into the structure of those platforms. Then we will continue with Ludovic Cianarella, Regional Manager Western Europe and DACH at Lemonway. And Ludovic will address how financial transactions optimization work in B2B marketplaces and what it actually entails, both from a technical standpoint and a regulatory standpoint. And last but not least, we will follow up with Jan Eilen, who is Business Development Manager B2B Payments Western Europe at MasterCard. And Jan will really focus and deep dive into the virtual cards and how it's currently today an efficient tool to digitize your B2B transactions. And then we will finish with a Q&A, and our experts will be here to answer all your questions. So please feel free to interact with us all along the webinar. On the right-hand side of your screen, you have a panel, and you have a tab called questions, and you also have a chat. So please insert your questions in there. I will pick them up and I will ask our experts to reply to these questions at a certain time. And we also prepared for you a nice poll. And it's also a way for you to interact and to benchmark yourself with the rest of the audience. And we will comment the results at a given time. I see that we still have participants joining in, but I think that without any further ado, and since we have a pretty packed program, it's time to kick off the event. So let's start with Yvan. So Yvan Wallert from EPSA. So EPSA is a company that actually offers consulting expertise on outsourcing and procurement. And EPSA is helping big corporations in the launch of their e-procurement and more globally B2B marketplaces. So Yvan is going to deep dive on this acceleration of the B2B marketplace trend, and really going to explain the structure of those platforms. So Yvan, the floor is yours.
Thank you, Karine. Good morning, everybody. So first of all, we'll try to understand what we are talking about, because we've been talking about B2C marketplaces for years now. We're all using B2C marketplaces, but about B2B marketplaces, this is quite new, quite fashionable. And the goal here is to understand exactly what we are talking about and why is there such a craze about B2B marketplaces. So first of all, let's try to switch the slide. Thank you. So first of all, we all know that there is more and more complexity in our organization, on purchasing departments, on accounting departments, and a real issue in user experience about purchases in main organization. So the goal of the marketplace is to bring answers to those needs with more simplicity by reducing administrative tasks and optimize the user experience, which is quite important in our daily life today, because once more, we are used with B2C marketplaces, and even in our organization, we need a better user experience. And of course, marketplace can bring a wide offer, which answer a real need of the companies. And now, what are we talking about exactly? Because we use this word marketplace a lot, but just to understand exactly what we are talking about, this is not a traditional e-commerce website. We all know those websites. You go on the e-commerce website in order to buy the goods in your favorite store. Marketplaces are quite different. There is mainly four kinds of marketplaces: the generalist marketplaces, specialized marketplaces, open or closed marketplaces. Now, just to understand the differences between the four kinds, for generalist marketplaces, we are mainly in marketplaces which answer to the various needs, but for only one company, sometimes several, but it is not open marketplaces, as we'll see after that. We are talking about a one-stop shopping in order to be able to buy, I would say, almost everything we need in a company, but through a marketplace. For specialized marketplaces, this is quite different because we are on a specific need, a specific product, only cars, only clothes, only furniture, whatever, but specialized in one product with a real expertise on this product. About open marketplaces, this is probably the one we know the best, because those marketplaces like Amazon or Amazon Business are accessible to any suppliers, any buyers. So we are talking about a really wide offer, but no control on that. So everybody can go on it and buy quite everything, let's say everything on it. The closed marketplaces, we can say also selective or dedicated, is more a tailor-made marketplace built with the customer, depending on the needs of the customer, and it allows in the project to build it with the control needed by the customer, by selecting suppliers, and we'll see after what are the advantages of those dedicated marketplaces. So globally, those are the four kinds of marketplaces we can see in the B2B market. One more thing about marketplaces is that there is a real complementarity with the BPO activity, which is also a real issue generally about the management of Class C purchases in organization, and companies try to outsource more and more the spot buy purchases or Class C management purchases. And one of the goals also of marketplaces, but this is more for generalist or closed marketplaces, this is more complicated to implement in open marketplaces, is to bring in this marketplace all the catalog part and all the spot buy purchase part. So there is a real complementarity possible in the marketplace with those two kinds of purchase, catalogs and Class C or spot buy purchases. One more thing, now we are doing a focus on generalist or dedicated marketplaces. We can see here a single creditor model, which is dedicated to those kind of marketplaces. We can see on the drawing the process before the marketplace, so quite complex with many stakeholders, many suppliers. And there are connections between everybody, all stakeholders, all suppliers. The goal of the marketplace is to bring simplicity on that, with a real role of the operator of the marketplace, in order to centralize all the flows for the stakeholders, for the suppliers, and there is one single point with the operator of the marketplace in order to simplify all the flows. Those models can bring many advantages to customers, to the users, to the suppliers as well. And the main thing for the customer is simplicity, once more, because there is no more creation of suppliers in the system of the customer. And we all know that this is quite a real issue in the day-to-day management for customers. There is only one single model of invoice to book in the system instead of thousands of different invoices because thousands of different suppliers. So this is a real end of the complexity for spot purchases, but for catalog purchases as well. And this kind of model can bring a real control as well, because we still can keep a whitelist, a blacklist, a preferred supplier list, or even a workflow of validation. So it brings simplicity for the customer, but we still need control, and we can have both in this kind of model. For suppliers as well, this is a direct access to the customer with a simple KYS. We all know that for many suppliers, mainly small suppliers, I would say, this is quite difficult to get a new customer to answer an RFI in order to enter the catalog in the customer database. And with this kind of model, it's quite easy for the supplier to sell directly the goods to one or several customers through the marketplace. The onboarding of catalog is quite simple in the system. So it opened many doors to many suppliers. Now, if we made a focus on closed and dedicated marketplaces, as we just say, it brings simplicity, a good user experience, but still control in the model. Because there is, at the very beginning of the project, there is a selection of suppliers depending on the customer needs in order to choose categories of purchases we want to have on the marketplace. It allows to define at the very beginning the list of suppliers, a white list, a black list, or a preferred supplier list. And in the same time, it brings a control on the approval workflow, which is not completely possible on an open marketplace. Let's imagine an approval workflow with Amazon. That's not the same model. So here we are talking about closed marketplaces. But in the meantime, we can bring a wide offer with catalogs and spot purchases and a new user experience close to B2C marketplace because of a dedicated marketplace built with the customer, depending on the needs of the stakeholder or the user. So it brings the real user experience, simplification, a wide offer, but still control. And of course, when we are talking about simplification, we are talking about savings on internal costs, and even depending on the customer strategy with the marketplace, we can talk about negotiated agreements at the very beginning with the suppliers onboarding on the marketplace, or even competition on the marketplace, depending on the customer needs. So it can have a real positive impact on the prices of the products on the marketplace. Now let's talk about two business cases. Mercedes-Benz launched its own marketplace 10 years ago now. And the main goal was at the beginning to harmonize and to streamline purchase for sales department and for all the retailers of Mercedes-Benz. 10 years after, is included in a marketplace, indirect and direct purchases, but also investment and, of course, spot buy purchases. We are talking now about 750 active retailers on this marketplace and more than 200 catalogs onboarded. Another business case, which is more recent, is about Total, which launched its own marketplace last year, which is called Click and Buy, dedicated to Total users. And the main goal was the simplification and the user experience. So 10 years after, we talk more and more about user experience. It was not the case 10 years ago with Mercedes-Benz. And now for Total, 1 year after the launch, we are talking about 12,000 users in France, and now a deployment in Europe, which is in progress. We have more than 170 catalogs onboarded and all selected at the very beginning of the project by Total. So in those two business cases, we have at the very beginning of the project different goals, but at the end it brings for everybody, for customer, for the users, but also for suppliers in front of that, simplification in the process, a real harmonization, and streamlining in the whole process of purchasing and accounting department regarding those categories of purchase. And at the very end, we can bring a real customer and user satisfaction with those kind of marketplaces. So this is a focus about marketplaces, but now one key point on this business model is the cash management, and I would say the work capital management. And for that, we have friends like Lemonway or MasterCard to bring payment solution. So maybe I pass the lead to my friend of Lemonway, just to understand how we can optimize in those marketplaces model the PSP and the working capital management.
Yes, thank you very much for this great overview, Yvan. That was very interesting. So let's move on to Ludovic, indeed, Regional Manager, Western Europe and DACH at Lemonway. So quickly, for the record, Lemonway is indeed a payment solution for marketplaces and operating throughout Europe and based on an API that actually allows these kind of platforms, the so-called marketplaces, to manage their financial transactions in a compliant and efficient way. And Ludovic is going to explain the key features and elements that a B2B marketplace operator needs to have in mind to manage payment flows in a safe and compliant way. So Ludovic, it's up to you.
Thank you, Karine, and thanks, Yvan, for the great overview on the B2B marketplaces. Thanks to all participants. Good morning, Mahlzeit almost for the German-speaking attendees. And so just to set the scene, I would like to share a couple of figures and trends with you related to B2B purchases. I will start on the right hand, just to size the market and what we are talking about. Just in France, the B2B intercompany payment represent 2,600 billion. And France is one of the four key markets in Europe, together with Germany, UK, and Italy. What we observe as a trend is indeed a growing adoption of the marketplace model, with an increase of 94% over the last 5 years of the B2B transactions made online. So there are various explanations, but we can clearly see large corporates under pressure to transform their model and simply the way they buy and they sell. And the digital model by excellence is the marketplace. So this is one of the main explanations. On the other hand, let's talk about smaller companies. These companies, especially in the COVID context, are under pressure. They are paid late. You can see that in average, they are paid later than 11.5 days compared to agreed payment terms. And this is the root cause of many bankruptcy, 25% of the SMEs. So this is a trigger for the adoption of marketplace for the SME, for instance, that's a guarantee to be paid earlier. So now let's put ourselves in the shoes of buyer or procure-to-pay officer. The way they look at the types of purchases in a marketplace is divided in 3 categories. A being the more strategic purchases, so involves in the production. The B are recurrent and non-strategic purchases, the typical MRO. And class C are the non-recurrent and non-strategic purchases, like a bunch of flowers for the winner of the sales competition, for instance. So what is relevant here to stress is that for each type of purchase, you will need different payment methods. Typically, class A purchases will be settled by invoice or bank transfer, as opposed to class C that will be settled by virtual payment. We will know more later with Jan about virtual payment and virtual cards. And when selecting a PSP provider, you need to make sure that this PSP provider is supporting all the payment methods, depending on the type of purchases you plan to perform on your marketplace. So now let's talk about regulation. So for an operator of B2B marketplace, there are 3 options that is offered to them. So number 1 is to become a financial institution and so get your own agreements. That's option 1. I was about to say good luck if it's not your core business, because this is involving a high level of complexity. That's possible. But the learning curve, if you are not mastering all the know-how, the expertise, the connection with the regulators, that's highly complex. But there are some cases of large companies following that path. The option 2 is less common and so connected to the type of industry, for instance, travel or the level of volumes. So you can ask for an exemptions to the ACPR, which is a regulatory instance for German attendees. That's the equivalent of the BaFin in Germany. And so you can ask for an agreement exemption. Option 3, this is the one we recommend, is to outsource your payment engine. So the payment engine that will fuel your marketplace to a third party, a PSP like Lemonway, who has been doing this for 10 years, learned a lot in different verticals, and making sure that you will become compliant, as we'll see later on, and so deliver you with the powerful engine to, let's say, make simply your marketplace work, but not only this, staying compliant. So when relying on a PSP, forget about everything and just focus on the 3 C's. This is how we are trying here to summarize what matters when it comes to the selection of the right partner to build and to design your payment engine. The basis and number 1 is obviously the compliance, because without this step, your marketplace is dead. And there are some cases of marketplace that have been launched by large operators, I will not mention names here, that got a warning from the ACPR and saying, guys, the way you're operating your marketplace, like cashing in money on behalf of third parties, is not compliant. And this is one of the reasons why they came to Lemonway, to understand how they could get compliant within the time frame agreed with the ACPR. So we are talking here about compliance with PSD2, anti-money laundering regulation, KYB, identifying the KYS for your suppliers, and so this is the key function. Number 2 is a control. So what you want to have once you have achieved compliance is keeping control. Keeping control means getting a full transparency on the transactions. Have they been approved? Are they compliant to our internal regulation? Are they compliant, like when your internal auditors are checking your processes? will you pass through? This is about control. And then the cost. We talk here mainly about indirect costs, the cost efficiency. That's when you have to reconcile different transactions with different payment methods, different people and so suppliers to pay. So managing this cost can involve a lot of manual processes if you are not relying on a PSP. So this is why we are talking about the 3 C's. Now let us zoom on how does that work. So how does that work, and what does it involve to work with a regulated PSP like Lemonway? At first sight, if you see the little picture on the top right, sounds easy. You have a payer, beneficiaries, so paying in, paying out, and something is happening in the middle, and that's the B2B marketplace. But it's not as easy as it looks. And so as I joined Lemonway 2 weeks ago, I can tell you there is a high level of complexity that is mastered by an expert. So let's start if we follow the flow on the bottom. So it's starting with the money in. And number one here is to ensure that all payment methods that are used by the buyers are supported by the PSP. And that's not kind of obvious, that because it means that bank transfer, cards, virtual cards, and so different schemes, to enter a little bit into the details, needs to be supported. And because it has a high impact on the customer experience. If a buyer cannot pay, this is involving a lot of complexity in the customer service, etc., etc. So this is an important part. I will jump to the money out, and so coming back on what's happening between. Money out, it's about making sure that all the suppliers are paid what they are expected to be paid, but also in different time frames. Some will require instant payments, some others being paid monthly plus 30, monthly plus 60, and this requires the flexibility, but also a proper management of the different merchant account to talk about how it's managed internally here. So in the money out, you have different flows. I will not go into all details, but it means you need to differentiate the payment, but also the commission taken by the marketplace. And this is involving quite a level of complexity, which is better handled by a specialist. So management of payment accounts. Step number one is KYC and identify so your sellers, and which will help also to track the compliance, and also, do you want to work with this supplier? Has it been checked before? And not working randomly with any suppliers, not being checked by the procurement. So that's an effective way to select the right suppliers for your company, besides the compliance in itself. So in terms of money flows, so the money that you will cash in on behalf of third parties as an operator of the B2B marketplace cannot, to take an extreme example, cannot be mixed up with your treasury or your regular bank account. So that has to be isolated, and this is a very strict rules, so imposed by all regulators at a European level, not only in France. So although each different countries is applying this European regulation in different ways. And this is why it is important, we'll see later on, to make sure that these processes are working, not only in France or your home country, but in all the countries you are operating. Financial reconciliation, so that is performed by our internal departments, and so making sure that what is paid is matching with all the different wallets that have been created. So that was a little bit detailed, but my point here was to mention the complexity that you have to handle when you, as a PSP, and what is outsourced by B2B marketplaces. So here, when we talk about building a B2B payment ecosystem for a marketplace, here I identify 8 points that we can summarize by number one. So making sure that your KYB and KYS process is automated. And so that's one of the core functions of a PSP. And so it's working super fast. And so there are different technology involved to accelerate the KYB and KYS. And this is an important benefit besides the compliance, but also in terms of automation. Number two is that the PSP can match your scope. So scope in terms of geography, but also in terms of payment acceptance, making sure that all payment methods are supported, accepted, and so that will increase the chance of onboarding the right sellers, the right vendors on your platform. Flexibility on payment terms, I've mentioned it before. A point that I've not stressed so far is the importance of dashboard and reporting. The key assumption here is that you cannot please everybody in terms of reporting when it comes to B2B marketplaces. So this is why, for instance, to take the example of Lemonway, we have developed very robust APIs, which is enabling to develop these reporting capacities internally. Of course, there are some standard dashboards which are available, but if you want to customize, and so there's a big trend, and so not every business, not every marketplace is the same. So you have the opportunity to implement customized dashboard via the API. The other aspect, I will not spend too much time on it, but coming back on my initial slide, and when you see the bankruptcies and also the importance of ensuring compliance of all your suppliers, risk mitigation. So in a VUCA environment, so uncertain environment, is super important, and that's one of the key functions of a PSP. So this is, in a nutshell, how you can optimize the payment engine of the marketplace B2B. And so I am happy to answer all the questions I can answer, and so hand over to Karine.
Thank you, Ludovic. Thank you very much. So before moving on to the Zoom on virtual payment cards, I just wanted to quickly stop for a while and submit a quick poll to you all. So on the right-hand side panel, you can access it via the poll section. So do not hesitate to share your views. So the question is the following one. So what is your number one priority when it comes to B2B transactions? So you have three options here. The first one is offering a buyer experience similar to B2C buyer's journey, thanks to the marketplace model, as we've explained it. The second one is controlling and monitoring transactions to offer better efficiency and transparency. So, for example, ensuring better financial reconciliation for treasurers within your corporation, or integration of those tools within your existing tools, for examples. And the third one is improving cost efficiency and human resources allocation. For example, making sure that your workforce is really focusing on tasks that create value for the company instead of manual tasks like financial manual reconciliation. So we will come back to this part later on. And now let's move on to the last part of the program with Jan from Mastercard. So Jan is going to explain why virtual cards are today an efficient tool to digitize your B2B transactions. Jan, I guess it's not even necessary to present Mastercard. This is the global payment network and technology company that is present in more than 200 countries, processing, from what I read, more than 80 billion transactions in 2019. And we are looking forward to know all about this innovative payment mean in B2B, that is the virtual payment card. Go ahead, Jan.
Thank you, Karine, and thank you, Lemonway, for organizing this kind of webinars. Very interesting. And as you already said during the introduction, indeed, Mastercard is a global technology company in the payment industry, and we are famous for our cards. And our logo brings trust, security, convenience to the buying process. At Mastercard, we connect buyers and suppliers, we connect consumers with merchants, and we do that, and that's really important, we do that through partners. like issuers, acquirers, PSPs, and so on. So MasterCard is a real or a true partner network. And when it comes to B2B or to B2B payments, so one business paying another business, MasterCard is building a multi-rail strategy. And that includes various payment solutions and even payment solutions beyond cards. What we want to do is to offer businesses, both buyers and also suppliers, a variety of payment options according to their needs at that specific moment for that specific purchase. But for today's session, we will focus on our core. We will focus on cards only. And more specifically, we will focus on virtual cards. So I will try to explain what exactly a virtual card is and what value they can bring for both buyers and suppliers. And I hope that at the end of the session, you will agree with me that virtual credit cards fit very well in those B2B marketplaces, which is the topic of today. Now, to set the scene, I would like to kick off with some trends that we see in B2B. Yeah, that's it. So first of all, businesses all over the world are transforming and digitizing process flows. That was already going on, but it has been accelerated enormously by this global corona pandemic. From one day to another, employees had to start working from home, and all those companies with a lot of manual processes were facing extreme difficulties in their day-to-day operations. And companies with automated and digital processes already in place, they were less impacted to keep their business running. And for your information, at MasterCard, as a direct effect of this corona crisis, we've seen an increase in virtual card payments, in contactless payments, and mobile payments. Now, next to that, the last couple of years, we've seen a booming gig economy and the rise of B2B marketplaces. Gig economy is the world of freelancers, contractors, and flexible jobs. And those people are often connected via platforms. And also, of course, they need to get paid for their work. And so the platform is not only connecting these freelancers with businesses, but the platform can also facilitate the online payment between the corporate and the contractor. And as the other speakers already mentioned, that there's a high demand from businesses to build those B2B marketplaces. And we see a clear change in the way businesses want to buy and want to pay. It is in a way I would say a consumerization effect, because in our daily lives, we are already used to buy online. We already use cards to pay. And we all know how it works. It's convenient, it's secure, and we feel very comfortable with it. And so this evolution in the consumer world has a direct impact on B2B procurement and on B2B payments. And slow but sure, we also see a new trend appearing. More and more businesses are aware of the importance of a healthy supply chain. And again, certainly during this corona pandemic, because business continuity relies on multiple suppliers that are able to deliver goods and services on time. Unfortunately, being aware of the importance of a healthy supply chain is not the same yet as paying suppliers on time. And I think Ludovic already mentioned it. According to recent research by l'Observatoire in France, French businesses, they pay their suppliers on average 11 days past due. In Germany, it's about 7 days, and in the Netherlands, 4 days on average. But luckily, we see across multiple countries in Europe, more and more governments monitoring payment behavior of corporate buyers and even sanctioning those corporate buyers who perform badly. And all this together results in an increased interest by businesses to pay their suppliers on time. And let's not forget, every buyer is also a supplier. So you don't need or you don't treat or pay others the way you don't want to be treated or paid yourself. And that brings us seamless to trend number 4. Slow but sure, businesses in Europe start building knowledge about virtual cards, and we see usage increasing rapidly. And one of the reasons is that cards, and certainly virtual credit cards, can give you the possibility to pay your suppliers sooner, while paying later yourself. So these virtual cards can be an excellent solution for buyers to improve their payment behavior without compromising their working capital position. And this is one of the many reasons why we expect significant growth from virtual cards in the upcoming years in Western Europe. So according to a study from the Mercator Advisory Group, an annual growth rate of about 23% is to be expected in the upcoming years. And that makes virtual cards the fastest growing product in our MasterCard card product portfolio. And also this year, 2020, heavily impacted by the corona pandemic, we still see a growth rate of 20%. And that is because virtual cards clearly address the needs of businesses. First of all, because businesses are confronted with increased online spending, but also because virtual cards provide excellent reporting and data matching. And then, last but not least, virtual cards are also a very safe payment method. So I now mentioned virtual cards already a few times. I think it's time to tell you what exactly it is and what value it can bring to your organization and to B2B marketplaces. So a virtual card is a 16-digit card number. It comes with an expiry date and a security code, but there is no plastic. It is a virtual card number. And we often say that virtual cards are single use. That means that you create a new virtual card for each and every new purchase. After the card is used, it's no longer valid. You can't use it anymore. And that makes it all very secure. So this unique card number then perfectly matches with that specific purchase. The virtual card number acts in a way as a unique identifier. And what is interesting, we can add two great things to these virtual cards. We can add control and we can add data. By control, I mean that at the moment of card creation, you can set a maximum card limit. You can define the currency in which the payment can be made. You can also set the validity period of this card, and you can define the merchant category. So as a company, you really stay in full control of this virtual card. And when it comes to data, we say that virtual cards provide enhanced data. That means that at the moment of card creation, we can add additional information such as the invoice number, the cost center, the GL account or an employee number, or even some free text like the name of the person buying something or generating this virtual card. So how do you create then such a virtual card? Well, if you are authorized by your company, you can log into a web portal. You enter the card control settings, like again, the currency, the amount of the purchase, the name of the merchant, and so on, anything you want. And then you push the button generate card. And the card number is visible on your screen. You then copy that card number and paste it in your online web shop and pay for the goods. But you can also send that virtual card to the supplier directly or to one of your employees via a mobile wallet. What I'm describing now is a rather manual process, but with an API integration, you can really take full advantage of virtual cards and fully automate the complete process. You can integrate virtual cards in a procurement platform or in a B2B marketplace. And then the approval workflow, the purchase policy, the automated virtual card generation, and then finally the payment are fully integrated and automated in your B2B marketplace. Now, let's have a closer look at the process flow then. Imagine that one of your employees needs to buy a new headset. Well, that person then requests a virtual card to a colleague that is mandated by the company to approve the request and to generate that card. So a new virtual card will be generated to buy for that one headset. And a lot of data will be added to that card. For example, the name of the employee requesting the card, the employee number, a cost center, the name of the merchant, the PO number, amount and validity period. And then the generated card is then used to order and to pay for that headset. And after that, the card is no longer valid. Again, this is a rather manual process, but with an API integration, the complete process can be fully automated and generate a lot of process efficiencies. After the purchase, the reconciliation can be easily done. There is one payment for one order paid with that one single-use unique virtual card number. And of course, all the data added will help you to get excellent reporting. If you now combine virtual credit cards with a trusted environment of a B2B marketplace where the employer and the employee feel comfortable with, well, then you take full advantage of both assets. And on the next two slides, I try to list the advantages of virtual credit cards for both buyers and suppliers. So let me walk you through them. So virtual credit cards generate a lot of advantages for buyers, for corporate buyers. First of all, virtual credit cards can generate different type of savings. Virtual cards make it possible to optimize your working capital position. So you pay now by virtual card, but you pay back the card issuer 45 days later, for example. In some cases, issuers are even willing to share some of their revenue with the buyer on all the spend paid through cards. And that is a so-called rebate. The second set of advantages are related to improved security. Virtual cards are single-use and they offer the buyer a lot of control settings like maximum amount or limited validity period. And also, you don't need to store sensitive bank account information of the supplier that you are paying. Next to all that, buyers can also benefit from improved efficiencies. As said before, every order comes with one unique virtual card number to pay for that one order. And then the card is loaded with all kinds of additional information like the PO number, the cost center, name of the buyer, and so on. And then last but not least, virtual cards are very flexible. And again, they can be integrated in buying processes, in marketplaces, and in other procure-to-pay platforms via that API integration. And companies can set up exactly the same process in different countries with a virtual card solution in the local currency. And all that is providing a great user experience for buyers and an experience they already know from their daily life as a consumer. Now, what I'm showing here or telling here is that the buyer business case, but also on the supplier side, on the other side, we find a list of advantages for suppliers accepting virtual card payments. With virtual cards, buyers, as said, can pay immediately, and thus suppliers, they get access to their funds a lot sooner. With bank transfers, for example, buyers are more reluctant to pay faster because their money flows out of their bank account immediately. So we could say that both buyers and suppliers improve their working capital position in using virtual cards. Suppliers taking card payments have a merchant ID. They are set up as a MasterCard merchant, and that means that suppliers don't need to share their bank account details with buyers. And virtual cards can also generate other kinds of savings for those suppliers because virtual cards are a very good alternative for early pay discount programs, for example, or for some of the factoring programs that suppliers already have in place today. And of course, getting paid immediately by card will also reduce the supplier's collection costs. And I would like to finish my presentation here with the last pillar on this slide, because and that is the buyer-supplier relationship, because I believe it summarizes it all very well. And I would like you to see this as a key takeaway of my intermezzo here today. So virtual cards can be the oil in the supply chain and can really improve the buyer-supplier relationship. Suppliers are paid faster in a very secure way, while buyers benefit from extended payment terms, potential rebate, process efficiencies, and a great user experience to offer to their critical buyers. And again, with these virtual cards integrated in a B2B marketplace, both buyers and suppliers can take full advantage of all the great features and characteristics of virtual cards. I will pause here. I will stop here. Happy to take your questions. I'm not sure if the poll is right immediately. Okay. Over to you again, Karin. Thank you.
Thank you very much, Jan, and thank you all for these great insights and valuable insights. So if you agree, before we move on to the Q&A session, let's have a look at the results of the poll. So actually, 75% of the respondents answered that the priority number one when it comes to B2B transactions is their need is actually to control and better monitor transactions for better efficiency and transparency. So I have a first question for you, maybe Yvan. So since you are interacting a lot with corporates and companies that are actually thinking about launching their B2B marketplace, so do you see this trend as being a priority number one when they come to you to see how they can work around digitizing their processes through the B2B marketplace model? Or do you see probably maybe also other reasons why they are looking at this model?
Yeah, sure, Karin. Actually, yes, I can see that when I'm talking with the customer. We were talking before about simplification, the user experience, but of course, this controlling and monitoring transaction is key for the customer. And I would say one of the things I heard a lot with customer is the good way to pay on time the suppliers. Of course, they want to improve the payment terms, but we know that in France, but not only, the regulation is more and more complicated, and customer wants to be able to pay their sub-supplier or supplier on time. So they're trying through the marketplace to find a good solution to control and monitor all the payments stream, but in a better way. So this is a real goal for the customer as well. After simplification, this is one on the main topic we are talking about, for sure.
Thank you very much, Yvan. We have a question from Baptiste in the chat regarding AML and compliance. So probably for you, Ludovic, how do you manage to maintain compliance? So PSD2 and AML workflows when a merchant has more than one acquirer and wants to use Lemonway as their payout solution.
Okay, I'm not sure that so understand what the question is involving here, but so in what I can describe is simply the processes that are respected by Lemonway. So which means that with regular interaction with the regulatory instance, so ACPR, so we are audited about the way we manage the level of compliance. In details, I think. I cannot even detail it, but so the processes are checked on a regular basis with the ACPR, which is a guarantee for our customers.
Thank you very much. We have another question, probably regarding the acceleration of the transformation of B2B transactions and through this marketplace model. And you actually spoke about this regarding this COVID situation and context that is bringing and speeding up the acceleration of this B2B transformation. Is this also something that you are seeing, Yvan? Have you seen a rise in terms of number of projects coming to you regarding B2B marketplaces since this COVID situation started, or it's the same trend as before and it's just a natural curve?
No, we can see it for sure. Of course, everybody's at home for a few months now, and we are used now with the B2C marketplace experience, and the user now cannot understand that it's not that simple in the company's process. So even for their own purchase within the company, they are requesting more and more simplified process, virtual card purchases possible. So of course we can see that for a few years now, but I would say that the COVID situation increased the needs of the user, so of the customer. So they come to us to request a marketplace model.
Thank you. Another question for you, Jan. It's probably related more to the new regulation, like for example 3DS V2 and the new RTS that are going to come into force very soon. So. Of course, the goal of this regulation is to bring more security related to the need of bringing more trust within digital payments. And is this something that, according to you, and as your high and experience at MasterCard, is going to impact the conversion ratio in terms of payment in both in B2B and B2C, or it's going not to be very much impactful?
Well, let me focus on virtual cards again here. It depends on the issuer, but for most issuers, so if an issuer, if a bank is issuing virtual cards, they can ask to be exempted from that regulation. And so most of the times, for most issuers, virtual cards are exempted. That means that they are integrated within, for example, this B2B marketplace. And this is a very secure way of making payments. And one of the reasons is to be exempted, or one of the conditions to be exempted, is to have a very low fraud rate. And virtual cards are an excellent solution for that, because most of the times, or in many cases, they are single use. So you generate one card to make one purchase, and then afterwards that virtual card is no longer valid. So again, if I focus on these virtual cards only, this is a very good way to keep payments very secure in these environments.
And another question for you regarding the activity. Actually, do you see certain sectors that are actually currently embracing this B2B virtual card innovation more easily than other activity sectors? I don't know, for example, if you see that more in industry or in supply for office management, so on. Do you see type of companies that are more embracing this innovation than others?
I'm not sure if I see certain industries that are more advanced in this, but what I can tell is that almost all companies are struggling with their long tail spend. So that indirect spend or category of spend, where often not strategic, where they don't have the resources to manage that well. And what I can see and what I can tell is that all companies in all kind of industries, all kind of sectors, are struggling with that and are looking for solutions to better manage that tail end spend. And so a B2B marketplace or a certain platform dedicated to that type of spend or category of spend, they get a lot of traction.
Thank you very much. We are coming almost to the end of this webinar. So a big thank to you all, and a big thank to our speakers, Yvan, Ludovic, and Jan, for sharing your expertise today. The replay of this session will be available right after the closing of the webinar, and you will be receiving an email notification, including the link to watch the session again. And of course, if you wish to receive the slides afterwards, you just need to send us an email to the reply to the notification you will receive, and our team will revert to you with a set of slides. So once again, many thanks for your participation. Wishing you all and your family a great festive season. Take care, and see you in 2021 for a next online boost. Bye-bye.
Bye-bye. Thank you, Karin.
Bye.
Thank you, Karin. Bye-bye.
Bye.